Have you ever wondered why a digital token, born from an internet joke, can suddenly capture the world's attention and skyrocket in value? This is the perplexing and fascinating world of meme coins. In simple terms, meme coins are cryptocurrencies inspired by internet memes, pop culture references, viral online humor. Unlike established cryptocurrencies such as Bitcoin, Ethereum, which are built on complex technological goals and use cases, meme coins often begin with no intrinsic purpose other than entertainment. Their value is derived almost entirely from social media hype, community engagement, and collective belief, making their journey through the market a spectacle of extreme volatility and human psychology. The phenomenon is not entirely new, but its scale has grown exponentially with the mainstreaming of digital assets. Think of them as the financial markets version of a viral video. One day, nobody has heard of it. The next, it is everywhere, discussed on social media platforms from X, formerly Twitter, Reddit, and Telegram. The first and arguably most powerful engine behind any successful meme coin is its community. These are not just groups of investors, they are highly organized, digitally native tribes united by a shared belief in their chosen token. This collective force gathers in online spaces like Telegram channels, Discord servers, Reddit forums, creating a constant stream of content, encouragement, and coordinated action. The feeling of belonging to something, of being an early member of a movement, is a powerful motivator. It transforms passive investment into active participation, where each member feels they have a stake in the project's success, beyond just their financial contribution. This sense of camaraderie is meticulously cultivated. Community members, often referring to themselves with specific names like the SHIB Army for Shiba Inu holders, work together to promote their coin. They create and share memes, rally against critics, celebrate every small victory price, increase mention by a public figure. This constant social media activity generates organic marketing that can reach millions of people in a matter of hours. When a community is strong and its narrative is compelling, it can create a powerful feedback loop. More hype leads to more buyers, which drives the price up, which in turn generates even more hype. The most straightforward reason for the explosion of meme coins is the raw allure of immense profits. Legendary stories of overnight fortunes, amplified on social media, create powerful FOMO, attracting speculators hoping to ride the next wave. This speculative frenzy is visible in market data. For example, Bonk's price rally came with an unprecedented increase in daily trading volume. The goal is not to hold forever, but to capitalize on short-term momentum. Section 4, the culture of chaos, fun, speculation, belonging. The third major driver behind the meme coin phenomenon is entertainment and cultural participation. For many, buying a meme coin is less an investment and more like joining a global, decentralized game. It is about being part of a moment, a shared experience that unfolds in real time on the internet. The low cost of entry for many new tokens. You can buy millions of units for a few dollars, or even billions of units for a few dollars. That lowers the psychological barrier to participation. It feels less like a serious financial decision, and more like buying a lottery ticket, or placing a small bet on a sporting event, with the added thrill of being part of an online community. This aspect of fun is deeply embedded in the branding and marketing of the coins themselves, their names, their logos, their websites, creating a playful, anti-establishment atmosphere. This contrasts sharply with the buttoned-up corporate feel of traditional finance. By participating, individuals feel they are pushing back against the old guard. Section 5. Reading the tea leaves. How data tells the meme coin story. To understand the dramatic life cycles of meme coins, look beyond the memes and analyze market data. Charts and metrics tell the crowd psychology story. How hype becomes price action. The most fundamental is the price chart, a token's value over time. Hockey stick pattern, classic meme coin explosion, flat price for long, then sudden vertical spike. That spike often attracts momentum traders looking to jump in. Trading volume is the next crucial piece. Volume bars show market activity intensity. Price rises on low volume, usually unsustainable. Price surge plus massive volume spike. Real capital is flowing in. Example: mid-2024 celebrity-endorsed coins jumped in price, but their volume charts showed short-lived activity and rapid crashes. Volume plus price analysis helps separate pumps from durable trends. Market capitalization, or market cap, matters too. Market cap, or price x circulating supply, shows relative size. Small cap coins can grow 100x compared to large cap coins. Speculators hunt low cap gems. Low cap also means high risk and low liquidity. Selling can crash price. Section 6. Navigating the minefield, volatility, risk, and due diligence. While the potential rewards are high, the world of meme coins is fraught with significant risks. The most prominent of these is extreme volatility. Prices can swing by 50% or more in a single day, driven by nothing more than a rumor or a tweet from an influential personality. This makes the market incredibly unpredictable and can lead to catastrophic losses for those who enter at the wrong time. This volatility is a core feature, not a bug. Anyone participating must be prepared for a turbulent ride. Never invest more than you are willing to lose completely. The first and most important rule. Beyond volatility, scams and fraudulent projects are ever present. The anonymous and unregulated nature of many meme coins attracts bad actors. One of the most common scams is the rug pull. Developers pump price, then withdraw all liquidity, leaving the token worthless. Another risk is the honeypot. Tokens coded to allow buys but block sells. Do due diligence, check for a third-party security audit, and verify if the liquidity pool is locked. Keep your curiosity high, but keep your risk managed.